everyone. Welcome to the first episode of YIN'S Squawk Box for the fiscal year of 2021. And in this episode, we're going to be talking about what have I done in terms of money management in the fiscal year of 2020. So it's going to be quick. It's going to be a big wrap up. And let's get started. So the first thing that I want to tell you guys is posting my letter. I write annual letter to my investors, to my friends, to my audience about what have I done for the fiscal year of 2020. And I do this every year. So it's going to be an annual letter. So if you navigate to my website, yinscapital.com, and this section, there is YIN'S letters. Click on that. The first one is 2020. That's going to be a link. Click on that. And that will bring you to the annual letter. So I write this letter every year, as I said, and there's actually a wider audience than I expected. Originally, the intention was to investors, but now I think there are many more people than just investors who are reading this. So thank you all for enjoying it, and I hope I'm doing a good job. This year, I lucked out big times. I delivered a 72% return on the YIN'S Capital Fund, and it's been doing great. Typically, the letter is composed the following sections. I will be given a quarterly report, and as well as what have I done as a summarization for the past fiscal year for this fund. Pretty much it sums up to about 3 to 4 sections. In this year, as you can see, there are 4 sections. And you can skim through to take a look at the performance, take a look at the quarterly summary, and hopefully it'll be a fun read for you guys. Now, without further ado, let's take a look at the chart. Right now in front of me, I have an S&P 500 ETF Trust Spider Index Fund, and that's going to be pretty much the chart that we're looking at. We have this top in the February, let's put across. We have this bottom, let's put across, and that's pretty much the channel that we're looking at. Now, of course, it seems a little bit of post hoc, right? Like after the event, and then we're saying that what we should do, right? Sounds like that's the case, but really it's not. If you go to my video history, you'll see that I call it a correction of week 1 actually on this day. So let's put a horizontal bar. That's pretty much the price I'm looking at when I'm trying to liquidate all my portfolio. Is there luck involved? Of course there is. Is there skills involved? Some, but I will say most of it is luck. I actually don't really know why I did it. I just happen to do it. I feel like that's probably top of the market. We have pandemic, businesses are hitting stagnant behavior, and we're probably done. So that's pretty much the trade there. I liquidated all my portfolio, and as you can see on this day, stock market crashed down from 323 all the way to 313, and that's in the middle of February, if not late February. And I thought that might be a good signal that we're gonna be having a 3 to 4 week correction. And I end up being right about that 3 to 4 week. I actually start buying on this day. So let's put a vertical line. That's what I started buying. Let's zoom in a little bit. So after this day, as you can see, it's not that great, right? So my average price in the market is probably something like a 248, 250. As you can see, it's not the bottom, right? The bottom should have been 220. So in other words, I'm not God, right? Like I don't know that's the bottom. I only know that's going to be an area, statistically speaking, probably won't go that much lower, right? When I bought in 250, 240, I'm taking the risk that, okay, there's a chance that this thing go down 30 points. I'm just going to be okay with it. And it did go down 20, 30 points, and I was okay with it. That's pretty much my risk tolerance. I would say that if it goes down even further, I'll probably buy a little bit more, but it pretty much bounced back from there. And I think I add a little bit in this area. Let's put a vertical line, and pretty much that's a trade. Okay, so when I say I enter the market within this 2 to 3 week framework, I didn't mean to just buy on this low day, right? That's not possible. I'm not that smart. I'm smart enough to notice that this window is a good buy opportunity, but obviously I'm not God. I can't pinpoint this point. So in other words, if I'm hitting the area of 245, 250, hey, you know what? That's a good area for me, right? I'll take my trade, I'll take my position. That's going to be what I do. And when I say I take the trade, take the position, I don't mean just immediately put all my money into this fund, into this particular fund, SPY, right? I'm talking about tech stock. I'm talking about consumer discretionary. I'm talking about the power shares. I'm talking about all these things, the strong names, the growth names. I'm not just talking about the market, right? And then if you want somewhere down the road, you can probably add a little bit of a small cap, just put a little bit investment of the names that perhaps have some potential, but not immediately have the growth along with the market, that sort of thing. So that pretty much sums up the thesis of what I did for the fiscal year 2020. It worked. I lucked out, and that's going to be a 72% a year return. pretty much the realization is you have to get out in February, but you have to get back in the market immediately 4 weeks later. And that's going to be a very difficult thing for investors to do, right? For big hedge funds, if you're going to take a loss in February, it's unlikely that a month later they get back to the desk. They're like, oh, yeah, I'm going to get back in. In all reality, if people respect, and they do in real life, the activity in financial crisis in 2008, and as a matter of fact, there's a big lesson for us to learn. Then, in all rationale, if you respect the history, people will be like, let's give this market like a year or two before we enter, right? It's going to be a big crash ahead of us, and let's hit it. But that's not really the case, right? And specifically, why that's not the case, it's coded in Ying's timer algorithm, and that's why I timed this perfectly. So the skills of this decision made is largely due to the Ying's timer algorithm, which excludes human fear completely. And that's going to be a big component and why Ying's timer algorithm is extremely special. So I'm not saying this thing is perfect. Right? I'm not saying I traded this thing perfectly, A plus trade, right? But there is some lesson to be learned. And I think it's going to be a good lesson learned here. And I'm lucky that I learned something from this. So that's going to be the thesis for fiscal year 2020. Now, a couple of the names I want to mention. The first name is Zoom. Zoom is a no-brainer, okay? Right? If you miss somewhere in the past year, 2019 or whatever, right? You should be realizing in the beginning of 2020. And that's just going to be a realization that you had the idea that pandemic is happening, you want to counteract it, right? What do I mean by that? When there's an unfortunate event in the economy, humans figure out a way to solve it. We always do. It's just a matter of time, it's a matter of solutions. So, in other words, here the solution is okay, online platform. I don't even know what other online platform there is, right? There's Zoom. Why don't we just buy it, right? It's almost like a no brainer. The only thing that's lack is courage to press a button. And that's what I did. I had the courage, I had the stop loss, I know my risk, right? I'm not giving this thing to $0, right? If it comes down to $10, $20, I'm gonna get out, right? So that's the idea there. I'm not dumping all my money in this name, but I think the potential in this name worth the risk that I'm taking. So I took the trade somewhere in here, I believe. Let's put a horizontal line, and then somewhere again in here, horizontal line. So my average price is below $130, $140, and right now this thing is at 340. Okay, so that's going to be the kind of trade that, yes, it came down from $500 and it looks scary if you look at the past 3 months. But who cares? I've had the stock from 140, right? Why do I care about that? So that's going to be the idea here, right? Now this trade is becoming an investment. It no longer follows the definition from trading perspective, right? Now it's becoming a value investment. So that's why I like this name. And I'm lucky that this thing performed the highest for the fiscal year 2020. Now, what's the next name that I want to talk about? The next name is actually Tesla. Let's take a look at the chart. Wow, look at that. So Tesla, I actually did not get involved very early when it started to boom. If you are lucky, you should be able to get in this name 2019 or whatever, right? When this thing come down from $72 to $40, okay, then you should probably buy some. But unfortunately, I did not get involved there. I didn't even get involved for the end of 2019. I didn't even get involved for early 2020, right? I just completely out of my radar. I only got involved when the stock hit $500 and come back to 350. And I was like, oh yeah, that's pretty big drop. Okay, let me buy some. So let's put a vertical line there. That's where I bought it. And I specifically remember this date because it's in the beginning of the semester. And as you can see, the date is September 9th. I was like, what am I supposed to do with this rest of the cash in my account right now, right? I gotta do something with it. I opened up the account and I saw Tesla's drop from $500 to $350. So I was like, yeah, this is probably not gonna go down that much more, right? I opened up my Ying's timer algorithm. I check out the probability, and turn out the probability from 350 and going down further, it's very little, and it's almost close to zero. So that's gonna be a good indicator that the stock is probably gonna be bouncing back from there. I took the trade, I put my money in there, and now this thing is going up to the roof. Now it's at $877. I don't think there's any stop in this name anytime soon. I think this name is gonna go to $1,000 straight. And I don't know what we're gonna do from there. Maybe it's gonna come back down $100. Maybe it's gonna come down $200. I don't know. But I think this name is not gonna stop until it hits $1,000. So if you're a scalping trader, if you like to take liquidity when it goes up, that's going to be a trade there. Maybe you can find some bull flag and you can trade to $1,000. Or if you're a short trader, I'll probably put a huge short offer at $1,000, maybe hit $1,000 and you can come back down a little bit. So that's the idea there for short traders. Nothing against short traders. You take your trade, I take my trade. Nothing wrong with that. If you are a short trader, that's going to be the trade that you take. So I just want to further say a little bit about this company, right? The first thing is that it makes cars. What do I like about this? If you click in order, and this thing is, I believe there's an old model last year. I think this year or even next year, they're going to renew this model. It's kind of not that bad, right? The base price is 30K. Most of the American families, as long as you can afford a house, you can afford this car, right? You can also take out loans, you do whatever, right? 30K is not that bad for electric car. On top of that, you can make it a performance level, which means you have 0 to 60 in 3.1 seconds. Now that's extremely fast, right? That's probably faster than most of the fancy cars you can see out there. That's probably faster than Audi or Maserati. If you look at the Grand Tour by the three guys in UK, they're doing the road test with Tesla and Audi, and I think Tesla won. And if I click next and you get to choose different color, I'm just gonna pick this color. It's a color that I like. And now we have all these features that you can select. I'm just gonna click next. And the interesting thing about here is there is actually this functionality called auto lane change, auto park, and summon tag. So the summon tag is actually the remote control functionality to have your car drive to wherever you are, say in a parking lot, right? Say I'm going to do grocery shopping. I step out of the car when I hit the Walmart, and I'm just gonna leave the car in front gate. I hit the button, the car can park itself, and then after I'm done, I'm taking all my bags, right? Probably 8 bags, because I'm doing Christmas shopping, and I'm standing in front of Walmart. I hit the button, the car can come to me, right? Whether it's going to hit anybody, that's uncertain. So if you want to take the risk, you can certainly do it. But ideally, that's going to be the story that they're trying to sell. And that's probably going to be adding up another 10K on top of that. And if you click next, I believe that's probably the end of it. And there you go, right? You get the 64K nice car with remote driving technology installed and with all the features. And I would say that's a pretty good price for a very advanced self-driving car. On top of cars, right? That's probably what most people know about Tesla, right? They make cars. On top of cars, there's also a lot of things to do. You see this solar panel as an add-on for your house, right? They also make solar roof. Solar roof technology is not completely novel, right? We had the idea, we had the technology years ago. It's how they market this technology that makes solar roof interesting, right? And then on top of that, they also have Falcon 9. Now, most people think Falcon 9 or SpaceX or whatever Elon Musk is doing is just some childish boy chasing his pipe dream. That's really not the case, right? If you think like that, that's a little bit too naive. The idea of SpaceX is they set a telescope into the space. What are they directly competing with? They're directly competing with Verizon, AT&T, and these guys. So in other words, I don't need to have a phone anymore in the future, right? I don't need iPhone, I don't need Samsung, I don't need any of these guys, right? I'm sitting in my car, I can directly communicate with satellite and use that technology to communicate with another person who drives Tesla. That's going to be a closed system that other companies cannot penetrate. And these technology, these potential market shares need to be priced in. I'm talking about a giant Tesla empire that perhaps it takes chunk of market from Apple, takes chunk of market from Facebook, takes chunk of market from AT&T, takes chunk of market from Verizon, and there's really no end of it, right? This we're just talking about Tesla right now. What if in the future he figured out a way to do the super pipe that transfers people from one location to the other, right? That's gonna be like a railroad company. Essentially, it's like a super pipe. You're sitting there, it transfers you from one location to the other with like hundreds of miles per hour. So these ideas all put together and composed of the future potential of Tesla combined. So that's going to be the interesting idea there that people ignore. And then on top of that, Elon Musk has all these side business. Perhaps he invested in a research company called DeepMind. Another company that he invested in is OpenAI. Another company that he invested in is Neuralinks, right? These companies are extremely interesting. They directly hire PhDs in computer science, statistics, mathematics, engineer, and they all work together with a lot of financial incentive, with a lot of market share, with a lot of real world data to tackle on some of the most advanced, most interesting questions out there. For example, if we can build a machine to read mind, right? If there's a robot out there, if the car is gonna have to read people's mind, where does the technology come from? Well, it comes from here, right? And this is gonna be an interesting idea here for this Neuralink technology, because if they happen to figure out something in the future, 5, 10 years, maybe perhaps there's a technology out there that can read human mind, that can know that if I'm tired, that can know that if I'm excited, that's going to be a potential boost for the technology of Tesla cars, right? Imagine I buy this Tesla car, and before this setup, I have another functionality. I have another page before payment. I have another page called 4.5, and then it asks us if you want my car to detect my feelings, right? If I'm tired, if I'm fatigued, the car needs to stop. The car needs to do something with the autopilot, right? All these things can be adjusted. All these things can be personalized. And we're talking about a giant Tesla empire out there that could potentially take over the entire United States transportation. So that's going to be the trade there. That's going to be the big thesis. If you like Tesla just like I do, then that's going to be the name that you pay attention to for the next 10, 20 years. So there you go. I hope you liked this episode. It sums up pretty much most of the things I do for the fiscal year of 2020, and it gives a little bit of thesis for the 2021 and potentially next 5 years, next 10 years about artificial intelligence. This Tesla is going to be a good example and illustration of where we're heading at. And if you like the video, hit that subscribe button, and I'll see you in the next episode.